Welcome to the Daily Business and Finance Show. Trump media takes a hit, Biden greenlights Ukraine strikes in Russia, Dell stumbles despite meeting Q1 estimates. Paramount soars as Skydance sweetens the deal, Wall Street buzzes over private credit boom. Medical Properties Trust announces dividend, Summit's lead asset outperforms Merck's Keytruda in lung cancer battle. Costco surpasses sales expectations with stagnant membership fees, and China tightens grip on aviation exports. Stay tuned after this short ad break to delve deeper into these headlines. Shares in Trump Media and Technology Group, the entity behind the social media platform Truth Social, experienced an 8% decline following the guilty verdict on all counts for its majority owner, former President Donald Trump, in a New York court case. The sentencing for Mr. Trump is scheduled for July 11th.
Reports suggest that the Biden administration has given Ukraine permission to utilize weapons provided by the United States for striking targets within Russia, particularly in the vicinity of Kharkiv, which is Ukraine's second-largest city. This decision is a reaction to Russia's spring offensive. However, there has been no alteration to the policy prohibiting long-range strikes inside Russian territory. Switching gears now, Boeing finds itself under FAA examination as it presents a safety plan amidst export restrictions on China's aviation and aerospace equipment.
Dell Technologies experienced a 13% drop in shares, even though their first quarter results met expectations. The tech behemoth reported an adjusted earning of $1.27 per share on a revenue of $22.24 billion. Their Client Solutions Group maintained a consistent $12 billion, while the Infrastructure Solutions Group saw a 22% increase to $9.2 billion compared to the previous year. Yvonne McGill, Dell's CFO, emphasized the company's robust cash flow and growth propelled by artificial intelligence.
Reports indicate that Skydance Media has raised its bid for Paramount Global, resulting in a 2% increase in the value of Paramount's shares. The revised proposal is anticipated to be more attractive to all shareholders, both voting and non-voting. Skydance's strategy involves injecting more capital into the entertainment firm while decreasing the sum paid to Sherry Redstone, the controlling investor. This development occurs amidst a lack of communication from Sony and Apollo concerning their potential offer for Paramount.
The private credit market has seen significant growth, expanding from $250 billion in 2010 to approximately $2 trillion today. This expansion is expected to continue, driven by low interest rates and a reduction in riskier lending by banks. However, this growth is not without concerns. There are increasing worries about potential asset bubbles and the necessity for increased scrutiny due to liquidity demands and borrower quality. Despite these apprehensions, those within the industry maintain that their funding model offers greater security than traditional banking institutions.
Medical Properties Trust has announced a quarterly dividend of 15 cents for each share, keeping the same rate as before. The projected yield is 12.01%, which will be paid on July 9th to shareholders who are registered by June 10th. Recently, the trust completed a secured financing transaction worth around $800 million and is said to be nearing the refinancing of hospitals in the United Kingdom.
Summit Therapeutics' primary asset, ivonescimab, has surpassed Merck's Keytruda in a late-stage trial for non-small cell lung cancer. This led to a substantial increase in Summit's stock value and a decrease for Merck. The trial demonstrated that ivonescimab achieved its main objective of progression-free survival across different patient categories. Comprehensive results are anticipated later this year.
Costco's earnings report for the third quarter reveals a rise in comparable sales by 6.6% and an increase in e-commerce sales by 20.7%. For the fourth time in a row, the company has surpassed profit estimates, with a reported net income of $1.68 billion, up from last year's $1.30 billion. There was also an increase in membership fee income to $1.12 billion, compared to last year's figure of $1.4 billion.
Commencing on the 1st of July, China is set to impose limitations on the exportation of aviation equipment, technology, and software valued in billions. This action is aimed at bolstering national security. The imposed restrictions will be applicable to aircrafts, aerospace engines, and associated manufacturing tools. Exporters dealing with these items will be mandated to have a permit. It's important to note that this move does not specifically target any country or region. And that's a wrap on the Daily Business and Finance Show. Stay savvy, stay informed, and we'll catch you in the next episode. Until then, goodbye. I'm Montgomery Jones.
And I'm Amalia Dupre. Until tomorrow, stay safe and farewell for now.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.